Welcome to Vector News 24. I'm John, and this is your live update at 10:15 a.m. New York time, Friday, April 17, 2026, as the NYSE trading session is in full swing. U.S. equity markets are trading in a mixed but broadly positive range, continuing the risk-on tone that is carried over from the past several sessions. The S&P 500 and Nasdaq Composite are both slightly higher, supported by another strong showing in major tech names, while the Dow Jones Industrial Average is tracking near the flat line, with some industrials and financials holding back the overall move. The key takeaway is that today's session is consistent with a technical consolidation within a larger uptrend, not a fundamental breakdown. From an economic data perspective, the week's Producer Price Index release and related reports have reinforced the narrative that input price pressures are elevated but manageable. Markets are increasingly pricing in a soft landing scenario, where inflation gradually eases without triggering a major recession. The Federal Reserve remains in focus, with several officials delivering speeches this week that emphasized a data-dependent stance. Long-term Treasury yields have stayed relatively contained, reflecting the belief that the Fed can keep rates in a range that supports growth without reigniting inflation. On the financial news front, earnings season continues to dominate sector-level moves. Major banks and several large-cap names have reported results that are shaping sentiment around net interest margins, loan growth expectations, and credit quality. So far, the tone has been cautiously optimistic, with many firms highlighting resilience in domestic demand, even amid higher cost conditions. This is helping to keep the financial sector sell-off in check and supporting the broader equity rally. However, the tariff and trade policy environment remains a wild card, with ongoing tensions in the Middle East and potential new tariffs on key sectors like semiconductors and industrials. Looking ahead, markets will be watching the next batch of housing and labor market data, which will give a clearer picture of whether the soft landing scenario holds. Any surprise in these reports could nudge the narrative and, in turn, affect bond yields and equity valuations. For investors, the key message is that this is a pullback within a broader uptrend, with the S&P 500 and Nasdaq consolidating gains after a recent surge. Now let's move to crypto, gold and silver, and the mining sector story before we turn to Asia and Europe. On the crypto front, Bitcoin is trading near the upper end of its recent range, hovering just below $76,000, with the Fear and Greed Index showing readings in the extreme fear zone earlier this week, but now stabilizing. The market is clearly testing support around the mid-$74,000 to $76 range, with a strong bid stack visible in that zone on-chain. If Bitcoin can hold above that support, the technical setup favors a move back towards $76,000 or higher. A break below $72,800 could trigger a short-term drop towards $70,500, but that would likely be seen by many analysts as a buying opportunity rather than the start of a full-fledged bear market. Ethereum is trading in the mid-$2,340 range, with the broader altcoin and DeFi sectors under pressure, reflecting repositioning rather than outright capitulation. Spot Bitcoin and Ethereum ETFs continue to see inflows, which is supporting the structural bullish case, even as short-term sentiment swings between fear and greed. The crypto market is increasingly transitioning from a speculative environment to a fully fledged segment of global finance, with institutional decisions and regulatory developments playing a key role in shaping the narrative. Shifting to precious metals, gold and silver are trading in a firm uptrend. Gold is trading near record-high levels, with some forecasts pointing to further upside in the near term as inflation and geopolitical risks remain elevated. The US dollar-gold relationship and real rate expectations are key drivers, and the current setup suggests that gold could continue to outperform in a risk-on with hedge scenario. Silver is following a similar pattern, benefiting from both safe haven demand and renewed optimism about industrial demand, especially as the global manufacturing cycle stabilizes. The gold-to-silver ratio remains elevated, highlighting the relative strength in gold versus silver. For mining stocks, the story is positive but nuanced. Gold mining equities have benefited from the strong tone in the underlying metal, with several large-cap producers trading higher and outperforming the broader market. Silver mining names have seen even stronger gains, as silver's price surge gives them extra leverage. However, base metal miners and some industrial-style resource plays are under pressure, reflecting the softer tone in broader industrial sector sentiment. This is consistent with the broader macro backdrop, where growth is supported but not at the same pace as earlier in the cycle. Overall, the message from the crypto and precious metals markets today is that safe haven demand and risk asset positioning are both in play, but the balance is tilting more toward resilience than panic. That's consistent with the broader equity market tone we're seeing in the U.S. session. Now let's move to Asia and Europe, where we'll cover the latest economic indicators, data analysis, and news. In Asia, the Nikkei 225 and other regional indexes are trading in a cautiously positive range, reflecting the constructive tone that flowed over from the U.S. session. Japanese exporters, including automakers and electronics firms, are leading the gains, supported by a relatively stable yen-dollar relationship and a backdrop of cautious monetary policy from the Bank of Japan. The Bank of Japan's message remains that it will keep yields low and support domestic growth, which is helping to cap any sharp moves in the yen and providing a broadly supportive backdrop for Japanese equities. Beyond Japan, mainland China's indexes are trading in a mixed to slightly positive range, as investors balance the impact of higher oil prices with expectations for continued policy support from Beijing. Hong Kong-listed shares, especially in financials and real estate, are trading with a modest gain, reflecting the supportive tone in global risk sentiment, even as higher funding costs remain a concern. The broader Asian session has been constructive, which is a positive signal for the later part of the U.S. trading day, because strong moves in Asia often feed into European and U.S. sessions by influencing futures and options flows. In Europe, the DAX, FTSE 100, and other major indexes are trading in a mixed range, with some sectors lagging the U.S. rally. The European Central Bank is in focus, as markets await the next monetary policy decision and guidance. Recent data from the eurozone have shown signs of a slowdown, with manufacturing activity still under pressure, but the services sector remains relatively resilient. The ECB's tone will be key to the next leg of the European move, with any hint of a dovish tilt likely to support equities, while a more hawkish stance could weigh on risk asset positioning. From an economic indicator perspective, the week's PPI and related data from the US and Asia are reinforcing the narrative that input price pressures are elevated but manageable. The focus is shifting to labor market data and housing market indicators, which will give a clearer picture of whether the soft landing scenario holds. Any surprise in these reports could nudge the narrative and, in turn, affect bond yields and equity valuations. Looking ahead to next week, markets will be watching the next batch of economic data, including housing and labor market reports, which will give a clearer picture of whether the soft landing scenario holds. The tariff and trade policy environment remains a wild card, with ongoing tensions in the Middle East and potential new tariffs on key sectors like semiconductors and industrials. Crypto markets are expected to continue consolidating, with the next key levels to watch around $70,000 and $76,000 for Bitcoin, and the broader altcoin and ETF picture will be crucial for sentiment. Gold and silver are expected to maintain their defensive roles as safe haven assets, with the potential for further upside if inflation and geopolitical risks remain elevated. For traders watching the NYSE, the key takeaway is that today's move is being supported by a global backdrop rather than just a US-only rally. If the Nikkei and other Asian indexes hold their gains into the overnight session, it increases the odds that U.S. markets can defend their levels or even extend today's rally into the afternoon and tomorrow's open. Conversely, any sharp late-session reversal in Asia could spark more caution in New York. That's your update from Vector News 24 on Friday, April 17th at 10:15 a.m. New York time, as the NYSE trading session continues. Markets are cautiously constructive, supported by a rebound in tech, a mixed but manageable economic data picture, and a relatively stable backdrop in Asia and Europe. Crypto is consolidating after a recent surge, and gold and silver are holding their defensive roles as safe haven assets. If you found this breakdown helpful, make sure to like this video, subscribe to Vector News 24, and hit the bell so you don't miss our daily updates. We're here to bring you clear, no-hype coverage of the stock market, economic data, financial news, crypto, and the precious metals and mining sector markets every day. Thank you for watching. Until next time, I'm John, signing off.